And welcome back, everyone, to Money Show's virtual expo. We are pleased to welcome Zachary Mans. He's the co-host of the Stock Waves and Mining Stock Service within the ElliotWaveTrader.net, providing wave alerts and trade setups on individual stocks as well as a miner's model portfolio. He also co-hosts the site's weekly Beginner Circle webinar for new members. One of the founding members of Elliott Wave Trader's site, Mr. Mans began working in finance as an investment advisor in 2008 and adopted Elliott Wave theory. We are also pleased to welcome Garrett Patton, Senior Analyst, U.S. Equities and U.S. World Indices. Garrett is a technical analyst and a chief educator for ElliottWaveTrader.net, a live trading room featuring Elliott Wave analysis on market indices and stocks. The articles and analysis from Elliott Wave Trader appear regularly on Seeking Alpha, TheStreet.com, and MarketWatch. Mr. Patton's focus is primarily on equity futures and demonstrating the capabilities of unconventional technical analysis. Garrett, Zach, thank you so much for being here. It's all yours.
Thank you.
Yeah, thank you very, very much for the introduction. So we wanted to talk to everybody today about how we use Fibonacci Pinball in our Stock Waves service to look for good setups both on the long side and the short side. So I'm going to start off the webinar with a kind of quick, bare bones, basic primer of Elliott Wave theory and Fibonacci Pinball, and then I'll pass it over to Zach, and he'll go over some examples of some recent wave setups that we used Fibonacci Pinball as our methodology to look for price targets and invalidation levels and basically all the parameters you need to set up a nice trade. So to start with, if you're not familiar with Elliott Wave theory, don't worry, a lot of this will be pretty confusing. We do have a lot of educational materials for free on our site, though, at ElliotWaveTrader.net. And you can also head over there at any point, and we offer a 15-day free trial, and you can check out the service for yourself. So that you can see on the screen currently what is pretty much the basic pattern that Elliott Wave theory is built upon. And that is a 5-wave structure that progresses price in the direction of the larger trend, followed by a corrective 3-wave structure that moves counter trend to that larger trend before setting up the next move higher. And it's important to note that Elliott Wave theory is fractal in nature. So these patterns repeat themselves at various different degrees, which means that if we were to look at the subwave structure of the waves, the actionary waves that are progressing price in the direction of the larger trend here, the wave 1, the wave 3, and the wave 5 would all subdivide into 5-wave structures as well. And all the corrective waves, waves 2, 4, and B would also be those 3-wave ABC structures. For those 5-wave moves that progress price in the direction of a larger trend, there are 2 variations of those structures. The first is an impulse. These are the most desirable forms of motive waves or 5-wave structures to trade because they're the most predictable, and they're also the strongest trending moves, moving price in a specific direction faster than the alternative, which is a diagonal structure, which still progresses price in the direction of the larger trend, but does so in a little bit slower, more labored fashion in comparison, often with overlap for the wave 4 into the wave 1 price territory. So here's just an example of an ending diagonal structure. The reason I wanted to show an ending diagonal structure is because a lot of the structures we're going to look at actually for recent examples from stocks are ending diagonal structures off of the December low as C waves. So just wanted to note that variation between the 2 ways that a 5-wave structure can fill out. And you can see here that there's a lot more overlap and choppiness within a diagonal structure in comparison to what would be otherwise an impulse for a 5-wave move. And usually after an ending diagonal completes, the reversal from that 5th wave is going to be pretty swift in the opposite direction. So let's move on to how Fibonacci Pinball works. Fibonacci Pinball is something that the creator of ElliotWaveTrader.net, Avi Gilbert, came up with just basically during his practice of Elliott Wave theory. It's something that he noticed as far as how these impulse moves were tracing out, and the various subwaves within those impulse were hitting specific fibs very commonly as they progress through that 5-wave impulsive structure. So the idea here is that we take the length of that initial wave 1. So if we're expecting an impulse to be filling out off of a significant low, we look for an initial 5-wave move to the upside as what is wave 1 of that impulse. And then once price corrects in the wave 2 and that wave 2 has completed, we take the distance traveled by price for that wave 1 and then project that distance off of the bottom of wave 2 using the fib extension tool to get our targets for the rest of the 5-wave structure to the upside. So once we've measured the distance of that wave 1 and then projected those fibs off of the bottom of wave 2, then we have some potential targets that we can look for the rest of the subwaves of that impulse to follow. And usually the initial wave 1 of 3, again, the fractal nature of Elliott wave theory suggests that that third wave should also be a 5-wave structure as well. So once that initial wave 1 fills out, it typically will target between the 382 and the 618 fibs here. Those are the initial targets we look for our wave 1 of 3 to reach. Usually it's either the 382 or the 618 fib. And if price only reaches the 382 fib, then that is kind of our anchor point to suggest that the next target for the wave 3 of 3 will be the 100% fib. So basically the same distance traveled between the bottom of wave 2 and the wave 3 of 3 is what was traveled during the entire wave 1. And then assuming price does stop at that 100% fib, then we look for the wave 4 of 3 to pull back and hold between the 764 and the 618. And as long as that support holds, the next target for the wave 5 of 3 is the 1382 fib extension. Assuming price does stop there, fourth wave tends to come back to the 100 to the 764 fibs, and then the final fifth up to the 1764 fib extension. So we know that markets are not linear in nature. You're not going to see the exact same structure and targets being filled out in every single example of an impulsive structure. So there are a couple of variations to that. As I mentioned at the beginning, the alternative to the wave 1 of 3 hitting the 382 fib extension is instead targeting the 618 fib extension. And that basically just moves up the respective targets for the rest of the subwaves a little bit higher. So rather than wave 3 of 3 targeting the 100% fib, we would expect the 1236 to be reached. Next higher fib as well for the wave 5 of 3 up to the 1618. Usually after hitting a 1618 fib for a third, the fourth tends to pull back and hold the 100% fib, and then the fifth up to the 200%. And when we come across an example of an extension within one of those subwaves, which usually is going to be the wave 3 of 3, that's the most, that's the strongest portion of a trend within the impulsive structure, then we approach it the same way. We basically move the rest of the respective fib targets up the same relative amount. So rather than stopping at the 1236 fib, in this example, price had it targeted all the way up to the 1618 fib. So we just move the rest of the targets up 2 fibs as well. So for wave 5 of 3, instead of the 1618, up to the 200%, and instead of the 200% for wave 5, up to the 2382. Fibonacci pinball also works within diagonal structures. Not quite with the same relative accuracy as within an impulse, and especially in regard to the subwave structure within those actionary waves. Again, I don't want to get too deep into the details, but you can see that they're subdividing as ABC structures. That is a characteristic of diagonals. But the most common target for a third wave within a diagonal is the 1236. And usually we're looking for the 100% to the 1382 fib as our overall target range. Just the most common is the 1236. Then typically pulling back to the 618 fib if the 1236 is where the wave 3 stopped, 618 fib for the fourth, and then up to the 1618 for the fifth. But same situation as far as moving those targets relative to where price reached. If it instead had hit the 1382 fib, then we'd look for the 764 fib as the target for the fourth, and then the 1764 is the target for the fifth wave. So that is what I have as far as a quick little introduction to Elliott wave theory. So I'm going to stop my share and pass it over to Zach.
There we go. You guys should see the our wave setup table Is that showing, Garrett?
Looks
Yep.
good.
Okay, great. So what Garrett and I have tried to do as part of Stockwaves and also in the mining stock service that we offer, because we're the nature of the way that we're looking at those moves is kind of a more multi-week kind of swing time frame. A lot of the time frame charts that we're looking at are hourly or 4-hour charts or even daily charts. And while we might be zooming in to get more detail, we're trying to set things up and provide kind of a repository of analysis that our members can use to trade. And while there's an academic approach to Elliott Wave, we're also trying to set up a little bit more probability structure that can be used to apply to trading. So we set up what's called wave setups. And this is when you go to our service and you can click on some of the different tabs. All of those get deposited here into a table. And what we're doing with the table, I have this actually sorted by the most recent ones that we've updated, which means that they've hit a resistance level. So we've updated the Elliott Wave count as an official update that reports to the table. And usually it's going to update support levels, invalidation levels, the next resistance region, and the current target, and also show the latest price. We also, most of these tend to be an M in terms of time frame. That stands for months. That means we expect that the move will take, a couple of weeks to a couple of months. There's occasionally a longer term setup in here, and every once in a while we'll do a shorter term, a W for weeks. And the ranking you can pretty much ignore. But one of the nice things that we like about this is that the links, the ticker symbols are all links that take you to shortcuts of all of the most recent analysis. The initial setup link goes back to that initial setup. And you can also click on this. We actually need to get Jeff to make this as a clickable link to get to that update, but also you can go to the most recent video. So what I wanted to show you is highlighting a couple of these wave setups that were made. A lot of them, we've actually posted 8 different wave setups on December 22nd alone, which is where we thought that a B wave in the market was bottoming and setting up that potential C wave up that Garrett mentioned is now filling out as an ending diagonal. And around that time also, before and after, we posted a couple more. So there are a lot of active wave setups that have been doing phenomenally well in stock waves, but I just wanted to highlight a couple of those to show you how we're using that Fibonacci Pinball and Elliott Wave setups and applying those to an actionable setup for our subscribers. So this is the post from December 22nd that Garrett made on Microsoft, so that it has a similar look to the index where it made this higher high as a B wave. So this is an A and a B setup and holding into the fib resistance as a corrective retrace into support, setting up for a swing move as the B wave. So he put support in at 228. Showed where price is right now in the 234 region. So not bad risk reward with a target of 275 and use an invalidation level of 213. And what I want to highlight there is that is, that actually is the actual low from the A wave. So he gave for actual invalidation, he gave a lot more room. Sometimes we will use a higher level of invalidation for a wave setup that is not the actual Elliott wave invalidation. But we know that as things fall under the 618 retrace and then under the 764 retrace, while they might be technically still valid according to Elliott wave rules, their probability of success is sometimes significantly reduced. So that's why as a tradable setup, the desirableness of the trade goes down, even though technically it might still be valid. So here's an updated look at Microsoft from earlier this morning, showing that it did indeed hold that 220 region, and then has filled out really nicely, getting most of the C wave, at least the measured move, hitting that target already. But we have since adjusted the target higher because this looks like we're only at the top of the wave 3 soon, maybe stretching a little bit more into the 278 to 284 region, and then needing a 4th and a 5th wave to complete.
And you can see those fibs there when I was going over the Fibonacci pinball for diagonal structures, again, the most common target being that 1, 2, 3, 6 fib extension. So
Yep.
that 1, 2, 3, 6 you see on the chart is based on the size of the wave 1 projected from the bottom of that wave 2.
Right.
So
I have two fibs here. I have, and a lot of times I try and use these localized fib tools that MotiveWave has. So this is the C versus the A wave. So that means it's the measure of this A projected off the low of the B wave. And Garrett's actually counting this. I don't know if you switched it when it dropped a little bit lower there. But instead of the A wave here, I moved that. So
I think I had both options. Yeah.
Right. So I have the C wave fib extensions, as well as looking at the fib waves in the Fibonacci extensions inside the diagonal for that C wave. So here's a quick look at the update that was posted yesterday when it reached so initially this was updated on January 26th from the original December 22nd wave setup, and then it hit resistance again. So on January 26th, we raised the resistance from that initial 278 up to 278 from 259. Raised it from the original resistance, went to 259. In this wave setup, we were raising it from that 259 that was just recently hit up to the next level of 278, but also increasing the target from 280, pushing it all the way up to 290, because that's where you have the confluences of the next fib levels inside the diagonal, as well as the 1, 2, 3, 6 fib extension for the C wave itself. And again, we're rolling up all of the support levels to now have support in the 250 region. So locking in some nice profit, and invalidation level a little bit below that, because we can say, while it might still try for higher, even if it does break under that level, it's not going to be in a reliable pattern anymore. So we know that based on this pattern, for it to continue, it should really hold the 250 to 245 region. So another example was ADI. We were actually very, very bullish on a lot of semiconductors off of the October low, and very much so as they were retracing into December. So this one was a more shallow retrace, which didn't give it, it sometimes coming down deeper as a B wave or a wave 2 into the 382, the 50%, or maybe even that more ideal 618 fib, gives you a lot more reliability that is all of the consolidation and not just the start of something that's going to be wider and deeper. But because of the context of all of SMH and all the other semiconductors, it gave us a lot more confidence to add ADI as a very nice high, shallow, expanded flat consolidation for this B wave. So we set support at 159.75, which is just a little bit under where the price was right now, coming at 160. The invalidation level put under 155, because if this was holding as an A, B, C as an expanded flat, it was looking like 5 waves down. So it should really hold right there. And then a target level set of 206, which, as you can see, is about the 100% extension for that C wave, in this case, pointing to a higher high as the 5th wave of a 5th in a larger diagonal structure. So far, we did have an opportunity to update ADI because it did hit the initial resistance level. But it looks like it is still just the wave 1 of that C wave targeting the 206, 207 region. So when we updated it, we were able to raise the support level from that 159.75 to where any wave 2 should hold, ideally in the 169, 170 region, and raise invalidation up at least to the low that was struck here. So even though we haven't gotten all as much of the C wave that we did on Microsoft, we at least can raise our stop levels for support and invalidation, and then apply a new resistance level into this target region. The next one that we wanted to point out is HRI. This is from December 27th. This is an A and a B structure inside a 3rd wave of a much larger diagonal. So again, playing those Fibonacci pinball rules, we had an initial A wave that went to that 764 fib, and then have a nice wide flat for the B wave to just shy of the 382 retrace, starting to reverse there. It looks like certainly more than just a corrective bounce inside more of this B wave. And our 100% for the C wave has that really nice Elliott wave or Fibonacci confluence with the 123.6% green fib, which is what Garrett was talking about inside a diagonal where that Fibonacci pinball targets. So we can lay out our ideal waypoints inside that wave 3. We set support at 123.50, an invalidation level at 122.70, the first resistance level at 140, and a target level of 173, which is right at that point where the C wave is equal to the A wave and the 123.6% fib. So since then, HRI has moved along very, very nicely. It filled out a small leading diagonal for wave 1. Maybe you could count that as an ABC, and then a nice third that could also maybe be an ABC is ideally holding the 4th wave and set to get a 5th wave higher, still right to that 173 region. So when we did the more recent update, and we've updated it on January 8th, and then again, just on January 26th. So this is from the January 26th update. We've already hit this wave 3 that stretched a little bit higher and are holding a more shallow wave 4 ideally. But here you can see where we raised the support up from 140, which was raised from the original support when we did a January 8th update, and again raised invalidation levels now at the 137 region, and that can come up even more so as we get to the next resistance, and then change resistance, the next resistance up to 160, which was just hit yesterday. And lastly, I wanted to look at another semiconductor, AMD. This was posted on December 20th. It was filling out a really nice ABC consolidation into the 618 retrace, but some room for this to be 1, 2, 3, 4, and get one more extension lower, closer to the 60 region. So we put ideal support at 62.90, but an invalidation level down at 56, which is just under this low. And the first resistance level at 74, and then looking for a target in the 90s. And then you can see that since then, AMD did hold that 60 region, gave us a nice 1-2, 1-2 start. Some of these have, as Garrett mentioned, have turned into what looks more like a diagonal, where this can be 1, 2, 3 of the diagonal, holding a 4th of the diagonal, and maybe only gets an ABC up as the 5th into one more high instead of getting another 4 or 5 after that. So that's one of the things that we're on the lookout for. And when we've updated the support, the same support region is going to hold, whether this is going to get a 3rd and then another 4th and a 5th, or get an ABC up for that final high. So since that's already heading into, the next high is going to be into that original target region, most of our members are going to be trimming their positions and looking to get a little bit more defensive. And then if it clearly holds as a 4th wave, then there's an opportunity to scalp that 5th higher again. So here's the more recent update to the AMD setup that was posted on February 1st. Again, showing how it was progressing inside the 3rd of that C wave and rolling up our support levels up to 81 from 70s. And raising the invalidation up to 78.85 from the 67 region, and then setting a new resistance level, and also even increasing the target from the original 95 up to over 100, where if it's certainly going to get a 4th and a 5th wave up, then should be targeting there. That is all that I have to show you guys at the moment. And we wanted to leave some time for some questions. So do we have any to discuss?
All right, thank you so much. We had a viewer here in reference to the SPX. They're wondering, do you foresee it hitting 4,300 or higher in 2023?
I do think as long as we can hold some support, I mean, the SPX is not so entirely different from this AMD chart. It looks like we're trying to top as the third in that diagonal, should hold as a fourth and try for one more high. That one more high should attempt to get at least to the 4300s. But there is a lot of resistance at the roughly 4260 region, and certainly at the 4400 region, we're really not looking for anything much higher than that. A lot of things are starting to look pretty ominous.
Yeah, 4260 still looks likely to be reached. Could be a little bit higher than that, maybe even as high as 4400, but not looking for past that really.
All right, excellent. Thank you. Another viewer here, they're wondering what areas of the market do you recommend and what areas do you recommend avoiding?
We do every month, every 4 to 5 weeks, we try to, in our Stockwave service, during our Thursday live videos, every Thursday we have a live video for our members. We do what is a sector review. So we go over all the various different sector ETFs and kind of point out which ones look in agreement with the broader market or which ones look positioned to potentially outperform or underperform in comparison. So we're trying to identify which areas of the market within those videos could be some good opportunities, both on the long and the short side. So that's obviously something that's dynamic and changing at a relatively common rate. So currently, a lot of things look very similar to the charts we just showed you, where price looks like it's filling out a C wave off the December low to complete a corrective bounce, most cases off the September or October low. Which means room for a little bit more near-term upside, but otherwise potentially coming into a significant top that could turn price back down, and the possibility of heading back below last year's low next.
Yeah, I just pulled up an XLF chart because we pointed this out recently to our members, that of a lot of the sectors that have a very similar A and B structure for the C wave up of B, this seems to be running behind, but has what could be a nested 1-2-1-2 start to still carry the weight, as a lot of technology names might be closer to at least the top of their third, if not the whole C wave, and might start diverging and rolling over, maybe not dropping precipitously yet, but that might leave some room for some of the financial names to pick up the torch and try and run a little bit. This could also be viewed as a much more weaker setup, though, or not entirely as bullish, because it kind of missed the window when everything else was running. So, if you're going to be viewing this as a bullish setup, then recognize where recent supports are and where pretty key support levels are. And on XLF, it happens to be the 3480 to 3460 region is pretty key at this point. And then some other things that we're looking at longer term. Right now we're not so bullish at the moment on energy names. We're looking for them to continue to fill out more of a fourth wave that actually started technically, even though some things got higher highs here and may count as an extension of the wave three. Most energy names held as a B wave and are trying to start this C wave down. So we're looking at this as a wide flat that goes all the way back to June of last year. But once they do hold support in that, ideally in the low 60s, we will be looking for a swing move up in energy names to new highs. Let's see if I can get that to show up. There we go. So that's one area that we'll be looking at. But in terms of like sectors that are good defensive, protection from a bigger drop in the market, some things might last a little bit longer, but a lot of things, when you do get a pretty decent downdraft in the market, there are really very few places to hide.
One traditionally defensive sector is currently still holding, set up to potentially diverge from the market and head higher, and that would be utilities. So XLU is currently sitting at support for a similar B wave pullback that most other charts turned up from their December lows and filled out the C wave already, or the majority of which has filled out. XLU could be further behind in that retrace support for a B wave. So that's one sector to definitely watch.
All right, thank you very much. Another viewer here, they state, so one doesn't have to sit in front of their computer every day. Do Stockwave subscribers set buy and sell orders based on your target and resistance levels?
So we don't press the buy or sell button for you, or necessarily tell you the exact price given. We give you the parameters to turn that analysis into a trade based on those support, resistance, target, and validation levels. But as Zach was mentioning earlier, the majority of those setups are going to be swing trades, meaning that we expect them to take several weeks to several months to fill out. So no, you don't have to, once you're in that trade and you have the parameters set as far as where your stop is, you don't have to sit in front of the computer every day and watch it. Whenever we send out an update, you move up the stop to where we recommend, and then, we wait for the next update.
And the XLU is actually just posted as a wave setup on January 20th, as it was coming into this support. Had potential for that one more low. And you can get SMS messages or email alerts when things are posted as a wave setup or when wave setups are updated. And so you can just use those parameters to, if you're busy and doing your day job, then, you wait until it's in between patients or whatever it is. And then you enter the trade, or you could do it, at the end of the day, or just set limit orders for another day soon. A lot of times we're posting things as they're coming into support, but we also talk about utilizing tranches or layers of a position so that you could have, some where you say, all right, ideally it gets a little bit lower, but maybe it doesn't. So I'll get my first batch right around 68. And then if it does get lower, closer to the 66 region, then I'll add a little bit more. And then once it gets a little turn off of that, where I can use whatever low that was made as a tighter stop, then I'll add a third batch for that initial little move up. And then maybe even when I get a clear wave 1 and wave 2 of the swing move that I'm looking for, then I can add even a fourth tranche.
All right, excellent. Well, fellas, that is all the time we have for today. We greatly appreciate you, as always. Fantastic presentation.
Thanks a lot. Our pleasure.
Yeah, thanks for having us.